So, investing and trading are very different strategies in the stock market. So, the big question is, can you actually make money by trading? Well, in most cases, no, but there is one strategy that you can make returns with, and that would be forex trading. However, my next guest shares his painful journey of losing $30,000 in 1 week, and that turned into a teachable moment where he then decided to learn the correct way to forex trade. So, in this episode, he breaks down his painful journey. He also talks about his strategy. He gets into what kind of returns he makes per year, and he talks about what kind of time investment you can expect to make per day. Please welcome Kevin Jefferson. Kevin, welcome to the show.
Hey, glad to be here. Thank you for having me, Sean.
Absolutely. Thanks for joining me. So why don't you kick us off and tell us about your background?
Okay, so I'm a public school product, born in Illinois, grew up in Dallas, Texas, from maybe the age of 4, went to college, even, public school, went to and graduated from the United States Military Academy at West Point, and was in the Army, was a field artillery officer, and played around in the dirt, spent some time over in Kuwait, and was with a rapid deployment unit was my last duty station. So we were always in the field, and then I got out of the military in around 99, before 2000. And my first job out of the military was working for Georgia Pacific, which is a manufacturing company out of Atlanta. And so, what I remember about the time, because it's been eons ago, was that there was a real heavy push for former military officers and former senior NCOs, non-commissioned officers, coming out of the military, because I guess there was a real push for leadership, I guess, in corporate, right? And so I found myself fielding a lot of offers to go into roles that, I functionally didn't think I had, a particular skill set in. I didn't know anything about manufacturing per se, but I knew, more about leading people and kind of guiding people to outcomes. And so I was with Georgia Pacific, and I was in their container board and packaging division. So for those who don't know what that is, it's what most people miscategorize as a cardboard box. So there's actually no such thing as a cardboard box. It's actually called corrugated, and it's actually the corrugated materials what provides the strength for the box. And so anyway, what I realized, even though we did a lot of really neat stuff, we had contracts with with Kellogg's, and so you do the Eggo waffle boxes and the cereal stuff, and the wine stands that you see in the store with the really complicated Ernest and Julio Gallo wine, that's all corrugated, And so what I realized was, there is a lot of money in what we call dumb stuff, like stuff that nobody really thinks about, and I think it's appropriate also, even probably from an investment standpoint, because sometimes we get entangled with the sexy names, but don't really understand the value of the things that's kind of mundane. And so what, I really remembered that, because I was like, we're making billions of dollars and all we're doing is making brown boxes that people kick around every day and disrespect completely, and I remember, I didn't even realize or appreciate the value of the brown box myself until I went into the corrugated industry. And then I went into like a U-Haul and I saw how much they were charging for a box. And I'm like, this is outrageous. Like, this is really expensive. Like, this is like a small Happy Meal for a box, And so, so anyway, so I was in manufacturing, and I didn't, they taught us everything from design to customer service, scheduling, so logistics. So it was really a fully kind of encompassing fast track management training program. And so I really appreciated that. Coming out of the military kind of really got me into, I think, the right mindset as it related to corporate. And if I wanted to have any type of corporate aspirations, like what that would look like, or what I could, like, maybe at least in this industry, what it would look like. And I remember coincidentally actually getting recruited by Amazon back then. This was the late 90s. So like 98, 99, going into 2000. And I didn't take the job. I kept my little $52,000 a year job with Georgia Pacific, where I was guaranteed to get 2 raises in the next year, and or 58,000. I'm sorry. So yeah, I'd have $62,000, and by the time it was done a year, and Amazon was looking to pay me like, say, $80,000 to $82,000 a year. And the only thing I could remember thinking was, this company isn't making any money. Like, I don't want to go there, because they were not in profit, even though that was part of his manifesto. So anyway, I was really conservative, and just kind of speaking to my mindset, and when I was out there in corporate. But one thing I did know, one thing that was kind of always ringing in the back of my head, even back at West Point, and coming through, because I was, what they call a dead poet. I majored in English and I minored in information systems at West Point. So basically, it's like, okay, I got to be a professor, a lawyer, or something, I was actually studying for the LSAT while I was out in the desert, when everybody was asleep. I was kind of studying because I was like, I got to find a career, be in the military when I get out. And so anyway, financial advisory work was always something that was kind of exciting to me because of the knowledge, and I really enjoyed the markets, and just I saw that as a true path to real financial freedom or whatever. And so back in the 90s, I remember going to Barnes and Noble. You think about the internet as it is today, like it was nowhere near what that was back then. And so you still had to go to bookstores to buy books, and actually, get the intent and the motives of the author by reading, have to skim the book, and do the work. And so I would spend Sundays literally at the Starbucks at Barnes and Noble and learning about how to be a financial advisor, about ADB forms and all this stuff. And so I say that to speak to really people talk about manifestation and really intentions. And so I really set my intentions on getting myself prepared to be in that industry, although there was nothing on face, if you looked at my life at that time or my background, really led you to believe that I should be even thinking about going that direction. Not from an ability standpoint, but just from a career, and kind of where I'd been. And so, I remember doing that. And then in November of 2001, so for those who don't kind of place that immediately in their memory, that's about 2 months after September 11th, 2001. I got a call from a recruiter, a headhunter, who was looking for former officers and NCOs to become a financial advisor with Merrill Lynch. And so when he called me, he said, "Hey, can you fly up to New Jersey on Thursday for, to the headquarters for an interview? We just kind of seeing about some guys." And I was like, "Absolutely." And so for me, it was one of those moments to where I continue to tell my students is, prepare for the thing that you want, because when it comes, you'll never ever hesitate to do it if you really want it, And so, although the timing of when I got into the industry and I was trying to become a part of the industry as an advisor, it would not have made sense. It didn't make sense on any level, and even speaking back to when I was, I just really thought about this, even going back to my comments about Amazon, I was more of a conservative, safety driven person, I think, on some level. And so, but I just was not, I was absolutely certain that was the direction I needed to go. And so a lot of serendipity happened along the way. And I became a financial advisor and got my Series 7 and 66 and life insurance and did all that stuff. And so, I go into production in 2002. And the thing is, nobody wants to talk about stocks in 2002 because the market just was not ready for that. And so, it was bad. So, so I did millions of dollars of mortgage business my first year at Merrill Lynch because that was, interest rates were low. So we did LIBOR-based refis and, and wealthy people love saving money. So, you get a 1% mortgage on your $1 million house, you run and do that all day long. And so I just became more adept at creating value and in finding ways to meet people where they were. And then kind of back-ended into a conversation that maybe I wanted to have. And a large part of my success, I think, also were business owners and entrepreneurs, because I would call them about, just getting a better interest rate on your credit, line of credit that you have at your bank, because Merrill had a great business financial services arm. So I'm always, thinking, okay, I'm an entrepreneur because I have to earn my commissions. I have to earn my keep. The production goals are high, and they don't care what happened last year. They want you to bring in this money, and so I would just go to, like you say, business owners would always have a conversation about, they would have a conversation about their business 9 times faster than they would have a conversation about themselves, and that's just how business owners, what I found kind of their sentiment is that their baby, their project, their thing, their identity was built, kind of around this business. And so, I would just hit them where they were, and they were concerned about their employees. So they're trying to save on taxes. And so you just do these things to kind of like create value. And then all of a sudden you talk about investing because you're talking about a 401k plan or some type of deferred comp where the owner can keep more money and not have to, do certain things. And, you get really creative and fun with it. And so when I went independent, eventually I left Merrill and I started my own outfit in 2005, I think it was. I took that with me, and I just took the openness to like new things with me, because that was the thing that made me successful or allowed me to survive in the time that I did. And so I moved back to Texas. I was living in Alabama at the time. Actually, I was working with Merrill out of Huntsville, Alabama. And I moved back to Texas. I had actually gone through a divorce. So I was like, had no reason to be there except for my clients. So I moved back to Dallas and was really starting over. I mean, had just basically, refresh my business. And thankfully I had a lot of great clients. So some of them even to this day are, work with me, 21 years later, we do something together. We've invested together, or I trade for them or something. And so I came back and that was 2008, 2009 timeframe. And so I remember stumbling across the CNBC had this thing called a portfolio challenge that I was always participating in. And what it was essentially they give you $1 million of notional money and you create a portfolio. And the one that basically has grown the most after the contest was over, you actually got $1 million, right? And so I never got $1 million. But I remember that particular year, they had foreign currency as one of the asset classes that was available. And so the euro was twice as valuable as the dollar back then in 2009, 2008 timeframe. And so I just bought a lot of euro and didn't have any understanding of leverage or what that meant from a risk standpoint. But when I went back and checked my portfolio, it had grown significantly. And so it got me excited, like I'm conservative on one side and I know I'm very aggressive on the other, so there is this dichotomy that I work through when it comes to making money. And so, it caught my attention. And so I started that journey. And I really attribute a lot of me even going down that path, not only to the fact that I wanted to learn how to actually have a skill, because being a financial advisor, you have the skill of selling and you have the skill of understanding concepts and you have the skill of selling those concepts to people to get them to execute those concepts, but you don't really have the knowledge of the market as a trader, and I remember one of my clients, Sid Hutchinson, several years ago, we were at his house. He was a bond buyer. So we were buying bonds and this was like 2004. And something was on the news. The market was kind of coming back. Economic recovery was happening. And he said, I've never seen anybody who had a trade who wanted to work that couldn't work, and he was a tailor. He was a retired tailor. So he had that business that he sold to his apprentice. And so it got my attention. I was like, okay, I want a skill set. I want something that I can actually drive outcomes with, regardless of if anybody's buying or not, and so I started tried the stock market, but mind you, in the early 2000s, you have to read a book to do that. And reading books about learning how to trade is not my jam. Like I looked at this book and I'm like, this might as well be another, like this must be the fourth religion. You know what I mean? Like the fourth monotheistic religion, because I don't know what it is and I don't understand it. And so I kind of put a pin in all that. My life was happening all around me. And so when I stumbled across the trading with forex, it really got me excited. And so I started on that journey, and it wasn't easy initially because, as we just talked about a second ago, going on YouTube is kind of like the default method now to go learn something. Like YouTube was not even around. It was like in its infancy. I remember, ABC was promoting YouTube like in 2009, like this new thing, right? So the access to resources and trusted resources was very limited. And so that it made it very difficult. And you had to basically trust the brokers and try to find stuff online to learn how to trade the currency markets. And aside from babypips.com is probably the best website I've seen that can teach you from 0 to 100 of like understanding the currency market. But aside from that, you were just kind of figuring your way out. And so fortunately for me, what happened was one of my childhood friends, there were a group of 3 of us who would trade together at night. Like we trade the London session. And for those of you who don't know what the London session is, that's basically when everybody's asleep, you're up. So it's like third shift, so you're up at, 1, 2 o'clock in the morning and you're trading, that's central. So 2, 3 o'clock in the morning, Eastern, you're up trading for about 3 hours. And because that's where the meat of the market is. And then you go on about trying to have a day. And so one of my childhood friends, Toby, who we grew up playing soccer together, he told me about a gentleman out of Florida at a point. And just like most people are, I think most entrepreneurs are, and most people who want to be financially independent are, I was very stubborn. I was like, no, I'm going to figure this out on my own. And so I rushed, completely rushed to failure and got to my, when you talk about a hero's journey, you have that moment of reflection, right? You got that sitting on a rock moment to where it's like, okay, am I really Batman? You know what I'm saying? Do I want to be Superman or do I want to be Clark Kent? Do I really want to take the mantle of being great, or do I want to accept the mediocrity of being like everybody else and saying, okay, you know what, I'll just take my losses and I'll move on and do something else. And I remember having that conversation with myself after a week to where I had put like 50K in an account and I was highly leveraged. I really hadn't learned about risk management. And I took a trade and I think I was out of the money by $10,000 or so. And I joke with people, you probably heard it on other, people ask me about it. I call it the sinner's prayer, to where, I got out of the money, and then I said, God, if you give me back to break even, I promise I'll get out of the trade. And and it came back, and I literally was lingering like right there at take profit. I mean, like plus or minus right there. And just like most sinners do, I was like, well, maybe it's going to keep going, So I didn't close the trade out. It went against me. I obviously didn't have a stop on it because I wanted it to play out. And after a week of being, moving my laptop between my bedroom and my coffee table, the non-farm payrolls came out on the Friday. I hedged against myself because I was, thought I was on the wrong side of the market. And next thing I know, I took a $10,000 loss and turned it into like a $30,000 loss in a week's time. So beat that. So anyway, my chest was hurting. I went and got a massage. I had a couple of drinks. I just like kind of had to reset a little bit. But I remember I still had some money left in the account. So I was like, you know what, I still have a chance. And quite, candidly and seriously, I really took that as an opportunity to go and get instruction. And so I started learning about price action, because most people outside of the US were the ones who actually were trading the markets. So I learned from a guy from New Zealand, and then I got more consistent. And at a certain point where I thought I was really at the turning point, I got really nervous. And so I took like $5K that I made from a trade, and I took Toby's advice and flew out to Florida and invested that to learn from a guy who had learned from an institutional trader. And it changed everything. So he showed me how to see the market in the right ways. And so I became successful with it enough to basically eliminate my advisory practice, keep the income, and remove the clients, And so that's kind of what landed me here. And that was over 15 years ago when I started trading. So.
Hey, we have a story in front of ourselves to unpack. Kevin, I appreciate you sharing the loss there of $30,000. We at Ticker, we're big on investing. So, and one of our rules we call Rule 1 investing, Warren Buffett style, which teaches you Rule 1, don't lose money. Rule 2, don't forget Rule 1. You can do that with investing because you're not entering and exiting the market. In your case, trading, there's an example. Listeners out there, you think about trade, it can go against you pretty bad.
Absolutely.
Yeah.
Really badly.
Just to be clear, did you sell your financial advisory practice?
No, I didn't sell. We just kind of throttled it down. So we let them know that we were moving to transitioning, and we were doing other projects. And so they just, decided to either partner with us on new projects. We were doing more private equity stuff. So I just moved away from the conventional stuff, and we just kind of became more partners than clients, I guess. So we just changed our phase of business. But essentially, it was just how I was providing service to them was what changed.
Gotcha. And I want to get an idea of your percentage split here. Is it like, 20% focused on advisory, 80% on trading now?
Now it is actually probably, it's interesting you say that, because I just entered a new partnership that has nothing to do with the advisory, financial advisory piece as a personal advisor per se, but more business consulting. So we have an M&A partnership, mergers and acquisitions, where we advise people on not only buying and selling business, so they do, but we have a consultancy, and I was brought on as the financial kind of director to like help apprise them of their options with different financial stuff. But it's really a part of a bigger thing. So pinning that aside from that, I would say actually it's probably 90% trading. In the 10% consulting is actually probably me and my students, because I have students now that I teach how to trade. So the real consulting is with them. But 90% of my day is or my week, I'm a trader.
You're a trader. Okay. Because I'm on your site here, which is fmtrades.com, correct?
Yes.
Yep. And it looks like this is a place where you can do it yourself. So you teach people how to trade on your own, or I see you can do it for people as a service, correct?
Correct.
Okay.
So so the DIY is do it yourself, and that's really where we started. And that's actually, so when we were talking before we started the podcast about getting some nuggets, I'm really redirecting back towards the DIY side because it kind of got lopsided to the DFY, which is fine. But yeah, the DIY side was where I have the online course with self-paced and takes you from not necessarily having to know anything about how to trade to how to actually execute a trade, how what to look for, and then how to actually take action upon that. how to manage your risk and things like that. And some mindset stuff, which we start with mindset because a big part of trading really focuses on kind of your mindset. And then what evolved from that was the DFY side, because we at one point before COVID, we were doing boot camps. And so people would fly into Dallas and do a 2-day boot camp with us where we would teach them the same thing that they basically learned online. We would teach them how to go from zero to hero in about 48 hours. I mean, it's, at least competently being able to take a trade and read the markets. I don't expect them to go out and make $1 million, but they would come in and get really a sound. Some people are better in person learners than online. So we had that. And then in one of the classes, one of the last 2 classes we had, I remember we had a lot of healthcare people coming through. So a couple of doctors came through, some nurses and some IT people. But one of the doctors asked me on a break, he's like, I love the information. This is really cool. I get it. It makes sense. But like we rescheduled 3 times to have this boot camp. So like, how much would it be just for you to do it for me? And so we laughed about it, but he kind of helped solidify the idea of the DFY side, the done for you. So the DIY is for you if you want to learn on your own. And what comes with that actually is the ability to have us trade one account on your behalf. One of your, account with your own resources you put in. We have a way to where we can connect ourselves to it and not take custody of funds, because that's my big thing, is not, violating any regulatory requirements, obviously. So we have a way to do that. Even as a student, you can do that. And then we have our chat group where I send my trades out. So even if I'm trading for you and you're a student, I send you the trades with the entry, stop loss, take profit, risk percentage, all that stuff, so that you can actually, even if you're just demo trading, you could follow me and really see how I'm thinking about the trading, right? And so there's like a lot of ways to kind of hit them and reinforce the concepts while they earn along the way, because that's where most people, I think, in any financial endeavor, I think the biggest thing you're trying to overcome is the fear of losing out or missing out, right? And so I try to alleviate the fear of them losing out or missing out by allowing them to have one account attached to one of mine. But then I also want to educate them along the way so they can build confidence and at some point feel comfortable detaching from us and doing it on their own, like essentially leaving the nest. And then there's the done for you side, because like, as I mentioned, we have a lot of business owners and entrepreneurs who say, yeah, that's all cool, well and good, but really we just want you to do it for us. And it's not much of a difference because they still get the online course, but I don't expect them to be engaged. And so we just charge them their membership fee and they re-up every year and they keep, depending on how they do it, they keep their profits. Or if they use a prop account, they split the prop trading money with the prop firm. So we just try to find ways to serve people where they are. But the DIY is for people who want to learn. The DFY is for people who know that they're not going to do it today, but they still want to win with us.
The done for you, does that roll up under, like, are you allowed to do that because of your certifications? Or
so no, it's really more of a trade copying service. So what allows you to kind of alleviate that is like you say, everybody is establishing their own account, and we actually have some brokers in the U.S. that when people are setting up their own accounts with their funds, one of our attorneys is in what's called an introduction broker. So he has his licenses, and so we have contracts, or he has relationships to where we can recommend, hey, this is a list of people that are what you call regulated brokers. And then, but the client sets up their stuff themselves, they fund it themselves. And all we do is connect it with our technology to where they reading our data, almost like an API, to where we feed their pro rata share of our trades into their account. So like say, if you had a $100,000 account and I had a $100,000 account, when I took a trade in my $100,000 account, you get, 1-to-1 basically lot size, and because it's the same account. But let's say if you had a $250,000 account and I had $1 million account, you get 25% of that lot size that I would take a trade, because it's always proportional. And so that way we're taking the same trades, but you're getting it in proportion to your account size, which keeps your risk down. And then you can, kind of benefit. It's almost as if you bought into a fund without actually sending money to us. So that's the piece that keeps it kind of arm's length, is that you just, you're becoming a member. And as a part of that membership, you get to, kind of rock with us.
What I want to do next, I want to kind of understand your broker, but then I'll get to, because our audience is very tactical. They like strategy. They like to do stuff now. I'm going to get into the course a little bit and then get into your strategy with trading at a high level. Of course, if they want the full recipe, they know where to reach you, which they can see below in the show notes. So do you recommend a certain broker? Is it like TD Ameritrade or Fidelity, or what do you recommend?
Great question. So I look for just maybe, execution in spreads, right? With low spread, relatively low spread. So we have international clients, but the majority of our clients are in the U.S. And so our members are in the U.S. So I'll start with the U.S. and then I'll kind of expand out from there. So the two brokers that I generally work with in the U.S., and so I don't necessarily recommend, but I'll say my experience has been with, is forex.com, which they get a lot of high ratings, and they're good for people who maybe have entities, like if you have a trading business. They're good with, business accounts, because I think they give a little bit lower spread for business accounts or whatever. And then OANDA is another firm that's regulated and out of the US. And so just from a customer service and reliability standpoint, those are the two that I, normally try to get people to consider. But then internationally it's pretty wide open. So I have worked with FX Choice. They're out of Belize. I've worked with FXCM. Obviously, they're not here in the US anymore, but IG out of London. And then I would say, FX Choice is one of my faves out of, as far as international, because I had accounts with them before you people in the US couldn't get accounts with them anymore. And I watched them through like the Swiss National Bank crisis. And I think that was 2006, 2000, whenever, somewhere, I don't know, 2000, whenever it was. It's probably about eight years ago. Like there was a big Swiss National Bank issue to where the euro was pegged to the Swissy, and they decided in the middle of the night that they weren't going to do it anymore. And the market went horribly bad. And so what that meant in the currency market is you can actually, if you trade poorly, you can actually end up owing your broker money, because they're actually loaning you on leverage. It's credit on leverage, right? So it's like, it's the worst kind of credit. It's like there's like the Godfather, and then there's like institutional leverage credit. So like, so if you don't get your money from the Godfather, you go to the institutionals, like if it goes bad, it could go really bad, but they have fail safes in there to keep you from that happening. But sure, things happen. And so this was one of those times where things went wrong. Yeah. And I remember getting up, coming to my computer, because I didn't trade that night. I didn't see any setups. And so I got up the next morning and I came back and I saw this big, like really long red bar, like from the top of the screen to the bottom of the screen. I was like, something interesting happened last night, So, and I went and looked, and everything that was tied to the Swiss franc had like dropped significantly or whatever. I think that's what happened. And so, I went and looked, and that's what happened. The Swiss National Bank crisis, where they basically lied, and cost a lot of people, institutions lost a lot of money. And so a lot of retail investors got locked in there. I'm getting to the point. And so because of the lopsided move, first of all, if you didn't have a stop, but then secondly, let's say if you did have a stop, it might have blown you past 50% of your account value, because normally that's where they stop you out. So you could actually have a negative balance, and brokers might try to get you to pay that, But what FX Choice did was, I remember them forgiving the balance of the people who were affected, and they were not negatively affected from a financial standpoint, because that's normally where you get into issues with regulatory compliance is. Like FXCM, I think they had some issues with that. But when you're either trading against, or you're using the funds of the customers for like other purposes, right? Or so you're really not financially as sound as you think you are, or you say you are. And I watched FX Choice go through that really well and handle it from a customer service standpoint really well too. Just as a bystander, I wasn't personally impacted by it, so I really got to see it objectively. And so I really liked them as an international broker, FX Choice.
FX Choice, got it.
Yeah,
okay.
Yeah. Okay. Thank you for the question, though. I get that question a lot.
Yeah, because with investing, we have a list of our customers' favorites from around the globe. And so we have customers all over. So in the States, the big players are TD Ameritrade, Robinhood, E-Trade, Fidelity. There's a long list. And then internationally, the big question is, okay, who can I use to buy stocks outside of my country? And usually we recommend Interactive Brokers as the largest footprint. There's also First Trade, Free Trade, eToro. eToro is really hot in Europe. So there's a long list, but yeah, it's interesting about the trading world, different tools in this case. Yeah. I was curious to see what you'd say. So.
Yeah, no, that's great. Yeah, I think I had dealt with eToro at one point years ago on their forex side. I'm sure it changed a lot, but I didn't love it because they were definitely a dealing desk, and I felt like they were trading against us, like very heavily. And so it was just like one of those issues for me. That has nothing to do with the stock, so I'm not like berating them. I just remember my experience.
Yeah,
that's why I didn't say them. But Interactive Brokers I love because they give great pricing. They have a forex arm as well, and then now everybody has their own. So the difference and the reason I didn't speak to Thinkorswim, or which I think TD Ameritrade took them or whatever.
They own that. Yeah, that's what
Yeah.
I use. Yep.
Yeah. So I've got the Thinkorswim platform, which has a forex component, but they have their own technology. And so you have your own servers, which are not what are called MetaTrader 4 or MT4 servers. So the MT4 and the MT5 servers are the universal servers for forex trading. And so depending on if you're a person who likes to code or do create bots for yourself or whatever, sometimes working through a broker like TD Ameritrade, so all their stuff is great. I love their tools. Their tools are amazing. And so when I can't use them, because I don't use them, I use TradingView as my kind of tool box. But they have their own servers, so they kind of control it. It hits the market differently, which is nothing wrong with that. But you give up some control or autonomy going through there. Now, they normally have an MT4 or MT5 server that you can use, but a lot of times they'd like you to use theirs because I think they make more money that way. And that's perfectly fine. I'm all about people making money. Just know that if you use a Thinkorswim toolbox, you would want to use the MT4 component to where you could actually have the ability to either copy trades or do some stuff that you can't necessarily do on the other side. So
that's pretty technical. We'll pause there on the technical side. If people want to get into it, they should reach out to you.
Gotcha.
You even lose me when you get into stuff like that, like with servers.
I didn't know how deep we were going. My apologies. Okay.
No, you're good, because we're
back
all
on the
based
surface,
on fundamentals, straight up value investing. And of course, this podcast is more than just the audience. You know this. It can be building businesses and using real estate to create passive income and whatever. So let's talk about your course, and we'll get into your strategy. And I'd love to walk away with to know what your returns are. We'll get there in a second. Sure. But with your course, what do you charge for your course?
So the Platinum Lifetime Membership, which is you get access for life. You get the course. You get, obviously, there's a place to get time on my calendar for 1 hour blocks of mentoring. I have a weekly video or a Zoom call that I do called Monday Day School every other Monday night to do tutoring with the students. And then you get the ability to have me connect one account of yours to mine, and that's $74.97. So basically $7,500 is the membership, and then the annual renewal, if you decide to stay a member, is $3,000 per year. So that's the DIY side.
Gotcha. 7,500 lifetime.
Correct.
It sounds like initiation fee or like a setup fee.
Exactly right. Yeah. $7,500 initiation fee, and then the annual renewal is $3,000.
Gotcha. Okay. This podcast episode is sponsored by Ticker. Ticker is a platform that helps you manage your own investments with confidence. Check this out. Let's search for Apple. You can see Apple is on sale. That's looking good. Score is 61 out of 100, and margin of safety is 75%. Higher the score, the safer the investment, and the higher the margin of safety, the higher potential returns you can make. In this case, you can see the share price is $175 as of the recording of this video. And the upside potential, the fair value, is $398. All right, let's look at a different stock. We'll go to GameStop. In this case, GameStop is overpriced. Scores 39 out of 100. That's not looking too good. And the margin of safety is 0%. Here's some other features within. You can create your own custom dashboard. I like to set up and take a look at the top gainers and losers in the last 24 hours. I also like to take a look at the top search stocks, but you can really customize the dashboard to whatever you want. We have stocks, ETFs, crypto. This is a big one. We have a watch list tool that allows you to add stocks to the watch list. And if anything changes, such as that score or margin of safety, you automatically get notified. I call it the set it and forget it feature. And then we have portfolio trackers and alerts. So if you're looking for strong stocks, want to avoid bad stocks, and learn how to invest, I invite you to join Ticker for free. Let's get into the strategy a little bit. Let's just a hint to the recipe. What are you doing here?
Yeah. So great question. So what basically what the market does kind of on a high level. Well, first of all, I don't know if people even know what foreign currency trading is, right? And so
we've talked about it a little bit on this podcast. Okay. We've had a few guests that do get into it, but please reiterate.
Okay. Yep. Well, it's essentially the best way to look at it is your money is taking a trip, just like you take a vacation. When you trade in the markets, it's like your money is taking a trip, right? And so I always use Mexico because it's easy. Coming from Texas to Mexico, if you're going to Mexico, most times you're going to exchange some dollars for pesos before you take your trip. And that's just mere supply and demand. The demand for pesos is less in the US, so the price is cheaper. And so you get them and you go and enjoy your trip. And then at some point you make a round trip home, you convert your money back. And so in the foreign currency market, that's called a round turn. So when you're taking a trade or taking a position in the currency market, you're essentially giving your opinion about two currencies at the same time. So like if you were buying the euro, because most people are familiar with the euro dollar, if you were buying the euro versus the dollar, essentially what you're saying is, I'm going to buy the euro now, exchange my dollars for euro, and I expect the euro while I'm holding it to increase in value versus the dollar. So while I'm on that vacation, I'm on that trip, I'm expecting the euro to increase in value. And so at some point when that trip ends, when I decide that trip ends, I have to convert my euro back to dollars, and the delta between the values from when I bought it and when I sell it is what you're getting. So just kind of like the stock prices change, but currencies are always traded in pair because you're always buying one versus another one. And that's the relative strength and the value. That's the only really way that value is derived, is that one currency is more valuable than the other, and you play those off of each other. And so with that being said, you asked me
strategy.
Thank you.
Yeah.
And so every market is essentially the same. If there's supply and demand and it's chartable, you can do this in, the futures market. You can look at options, and probably because options are derivatives of stocks, and equities. So you can actually chart these things and see what the probabilities are. And so what I look at is actually what's called the market structure. And then within that market structure, there's this thing that I call the price cycle structure. And so price, what it does on a regular basis is it makes certain moves, right? Almost like footprints. So if you were a hunter and you hunted deer, you would learn the kind of the nuances of how it would walk through the forest or where it would be at certain times of day. And so what we're doing is we're looking at where price gives us the best indication of where it wants to go after it's made its moves. And so we're looking at the edges of the market, the high and the low. We're looking at where price is as it relates to that, and then basically the probability that it's going to continue going up if it's going up, or going down if it's going down. And so I call that the PPC 13 method. So what we're doing is, when the market is trending or moving in a certain direction, what we're looking for is a retest, or what we call a pullback. And then we're looking for a certain pattern that happens after that pullback. And so that pattern could be a continuation pattern, or it could be a reversal pattern, and we'll call it, technically speaking, it's called a complex pullback. So we have a pullback from the market where the market is getting more oxygen, right? So like the market, it moves in a direction and then it moves back, and you see that in the stock market as well, because it has to get air, it has to get oxygen to continue to thrive in a direction and move full steam ahead. And so on that pullback is where you get the best chance to get a good entry. And then the pattern that we're looking for confirms that entry. And then we look for a close above, I use EMAs on my charts, exponential moving averages. So for a close above the 13 EMA, because I found that to be a very reliable EMA for a continuation or a reversal, particularly for a continuation, but if it goes against it, a reversal and confirmation. So just really small things, pullback, pattern, close, and then you look at it in the context of where the market is, right? And so we try to avoid, and sometimes it's challenging because you are always fighting against your psychology and wanting to be involved, but you try to stay away from trading the middle of the market and really try to trade the edges. And then really, it drives your win percentages up to where when I do that, and I've experimented with some other methods on smaller time frames, but my win rate is about 80%, about 78 to 80%.
Perfect. I was going into that next. Okay, so win rate 80%. That's outstanding. What kind of returns are you getting per month and then per year?
Great question. So I shoot for my conservative side. I shoot really for like 3 to 4% a month, and then aggressively about 6 to 8% a month. And I would say that right now, and actually, so like this year, we're probably up. Well, it's kind of tainted now. Probably about 20 something percent conservatively, and we're up over 100% in the aggressive account now. So. Okay. And this is year to date. So we're, I would say that this month we're up 9% in the conservative account, and we're up about 88% in the aggressive account. And so that's kind of anomalous. I would say we're looking for maybe about 5 5 to 6% a month on the aggressive side, and you should be looking to get 3 to 4%. So we're right there on the conservative side. So we really what we do is just take the same trades and cut the risk in half and divvy it up. So some people want to get there faster, and some people don't want to go as fast.
Okay, that's good to know. So for context here, with my investing strategy, I'm up about a little over 100% this year. The only reason is we use a strategy called stockpiling. So you buy when the market's going down. So you get these nice slingshot effects, making 100% return. Value investing per year, no. You're
awesome.
not going. You're not going to do that, especially in a good year. It's like you're going to do well. Like you'll beat the market a little bit, but like when you're buying when the market goes down and you see that slingshot effect, that's where you make big returns. So you're getting pretty close to that with this year at 88%. What is normal though? Like I know this is 2022 is very much not a normal year. What is normal?
Yeah. So on the conservative side, I would say about 36 to 40% a year is pretty normal.
Really? Okay.
Yeah. I mean, pretty consistently. I had a kind of a low year a couple years ago when I was kind of even just started to think about promoting it, and we did about 21 and some change, 21 and a half, I think. Okay. Like that was right, like during COVID or whatever. So that was a little bit low, but and on the aggressive side, about 80 to 84% a year. So we're above where I want to be on the aggressive side right now. So I'm kind of being mindful of the last 2 months of trying not to give back what we've earned already to this point in the year. So
not have a $30,000 loss in a week.
That part, that exact part, you know what I'm saying?
You know what I'm saying?
You caught it. Exactly right. So the strategy. So what happens is you get some really good opportunities. You're out of the market most of the time. And so this week, this is kind of interesting to kind of speak to that. We had, like I say, the first 10 days of the month have been amazing, right? So we're up already 9% this month, and then 89% or something like that. And so I've been taking small trades to try to find my way in, because I only trade the British pound and Japanese yen. That's just a personal preference of mine.
Okay.
And so I caught it going up to the 188 to 190, and that was like 6 months ago, and it's finally getting up to that point. And so the challenge right now is waiting to fade it, because it eventually will tip out and run out of steam, and then we'll trade the reversal. But I think it'll probably be at least tomorrow until that happens. So I'm just I've just kind of concluded that I'm going to stay away from the charts until probably tonight or tomorrow, so that we can increase our chances. So that's the biggest thing of the strategy, is taking it when it's there, and then really having the discipline to stay away from it when it's not. And that's how you keep the 78, 80% win rate. It's just not trading as much.
Gotcha. And how much time per day do you spend on trading?
That's a good question. So I'm up around 4:00 in the morning Central.
Wow.
And that's just my personal time. My wife and kids are asleep, and so I got like 2 hours kind of just for myself. But it aligns with the Asian session going into the London session, or kind of blending, and so or ending and starting. And so some of my best trade opportunities are around the 4-ish time frame. So what I committed the first basically 6 to 8 hours of my day to looking at the market. And that doesn't mean I'm always sitting in front of my computer, but I'm looking for a setup early. And then if I find a setup that's suitable, because normally I'm more of a swing trader. Although I do have some positions that play out intraday. Most of the times my positions are 3 or 4 days at a time or whatnot, and some have lasted weeks. Yep. It just kind of suits my style, and it really, from a lifestyle standpoint, that's what allows me not to be at my computer so much, is because I'm not looking at the 5 and 15 minutes to make my living. They may be entry points, but I'm looking at the 4-hour daily, 1 hour and weekly, and kind of looking at the bigger, kind of the bigger picture, and then finding opportunities to get in on the bigger picture. So I look at it, give it about 6 to 8 hours a day. But as far as actual trades that I take, once I lock in, I essentially walk away from it, because, and I share this in the course, I have a set of timers that I created for myself that show that, 8, 12, 16 bars of activity are going to give us normally an indication if a trade is going to play out or it's going to go against us. And so until I get those markers hit, most times I don't even look at the market until they remind me to look at it. So that way you're not over trading or you're not, kind of over baking, so it's nothing like making a cake, putting it in the oven, and then you keep opening the door. You're not going to get,
Sure.
just little things like that. It's trade management stuff, all those things that kind of help you along the way. But yeah, the PPC 13 method is kind of what I do. Something real simple, pull back, pattern, close above or below the 13.
Yes. Now, for context there, on a few things here, audience, just so you know, day trading, you buy and sell same day. Swing trade, that's over the course of the next day. So buy today, sell tomorrow, or you can go a few days out. So that's a difference there. Now, the timing question, very much in line with other traders I've had on the podcast about timing. 6 to 8 hours a day on the low end. I have talked to people on this podcast. It's been upwards of 12 hours per day, but they're working in multiple markets,
gotcha.
Across the globe. So gotcha. You get it. You could be doing the same thing.
Yeah, for sure. Yeah, I mean, I could do that, and I could be divorced, and probably not see my kids. But I'd be rich. But no, just for me, and I actually did that because of the DFY side. I actually didn't even look at it that much. Like 4 hours a day at the most is what I would spend on the market before I started offering the DFY. And so what that did for me and to me was it forced me to kind of lean back into it as a business because, the people are kind of counting on you to win. But then also I just realized that I'm okay with missing out, and I'm still okay with it. But I found that if I just really just was a little more mindful, like add that extra couple hours a day of being mindful of the market, even if I don't take a position, I'm just that much more up on it. It's kind of like once you start double dutching, you just kind of stay in that rotation. But when you get out, you got to kind of get back in sync, right? And so I try to stay in sync, even if I'm not trading, kind of on a regular basis throughout the day. And so that's why I commit the first, 8 hours, 6 to 8 hours of my day to the markets. Because at noon, it's pretty much, in most cases, unless there's a major news announcement, like afternoon central, like there's no reason to be in the market. I mean, unless you're already in a position, like you're not going to find most things, like it's not going to be anything there. So at that point, you just get out of it.
I have a really good takeaway for the audience here. And thanks for the data here, because it really, it gives more weight to how you actually make money as a trader. So there are four, I'm going to break like at a surface, 4 different trading, not strategies, asset classes you could use. You have stock trading, crypto trading, options trading, and forex trading. And crypto, stocks, options, especially the risky side of options, you lose money almost 100% of the time. And that's based off the data of people being on this podcast or talking to people in this network. That's where you lose money. But forex, what Kevin is talking about, that is the one trade. Like if you want to trade, you better be investing in education. You better be investing in the time. And if you do those things right, then you can be making some consistent returns that sound like they can get close to value investing, which takes a significant less time. So just so stock trading, crypto trading, options trading, in most cases can lose money. I have to say this real quick. You're probably very familiar with covered calls within options.
Yes.
That is
the most conservative.
The most conservative. That is the one options trading I support. We'll also be releasing a course on that in 2024.
Awesome.
Essentially teaching people like, hey, you want to buy a bunch of stocks, sell a contract. If it goes up and hits a strike price, you sell and you take a profit. If the stock goes down, in that case, you keep the stock and you get paid a premium. So you make money when the stock goes up or down. So it's a very conservative, good way to make money.
Don, do me a favor. If refresh me or enlighten me if this is still true. I remember there was a statistic that I read years ago that I read that said that most options expire worthless, and so I think that's why probably the numbers are they are, because people are buying options, buying a coupon for the right to do something, but the coupon, you never go to the store and exercise it. So so the only person who made money is the guy who sold the coupon, which is a covered call guy or gal.
Yeah.
So essentially, that's what I kind of took it to be.
It Exactly. Yeah. And there's in options, there's strategies kind of like with what you learned, there can be unlimited losses. It can
Yeah.
just go through the roof. It's ridiculous. So that's why I only support covered calls as the only option strategy. But yeah, in this case, forex, you're like the third or fourth guy that's been on the podcast that talked about very similar. It's a big chunk of your day, in there's due diligence, a lot of work up front, a lot of education, but you can make consistent returns. So good on you.
Absolutely. Thank you. Yeah, it's something that, it's it's not it's on its face maybe simple, because when you talk about the concepts, just like anything, you can talk about the concept of driving a car, the concept of flying an airplane,
Right.
but they take skills, and the fewer people that are into it, probably the more skilled you have to be. But people go into it because, one of the things that I think was actually to my benefit when I did get involved was because of the lack of social media. I was actually interested in it for what I consider more higher quality reasons. And then now, because the advent of of social media and everybody kind of, speaking to things that they may or may not know. Now the hype and the clouds are greater, and that's in everything, so it becomes a lot more about the flash and the Lamborghini and the Ferrari that you can buy, and less about saying, hey, you know what, it's okay to have a full-time job. It's okay to take your time and learn this. It's okay to take a year where you went to 4 years of college and you didn't do anything over the 4 years, but study. So why not take a good solid year or a year and a half or whatever and get yourself foundationally strong to where now, okay, I make an extra $1,000 a month, or extra $2,000 a month, or whatever that number is. Start somewhere to be consistent, and then build it up to where it's something that's stable. And so many people, I think, really get locked into this battle between corporate and private, or entrepreneurship and corporate, to where they miss the holistic nature of how they can really harmonize. And so the best place that you want to be as a trader, and I don't know if that's for any asset class, but I believe so. The best place you want to be as a trader is from a position of strength. And there's no greater position of strength than when you have resources and you have reliable resources. And so say what you want about corporate jobs, or say if you want about, old school businesses that may be cash flowing, because I'm a big advocate of, that's what I do, take what the cash flow is. Hey, cash flow, and buy cash flowing businesses. That's how you build your cash flow, and add to your resources and diversify away from what you're doing. But it's you take that. Getting rich slow in this business says you committed 5 to 7 years of your life to something, so or you can just do it in 40, like everybody else is doing it, and maybe get there, but so if you commit it, just make the commitment and really look at what that is, and don't be afraid or ashamed to say, hey, I'm still working, and, build it up to where you can replace your income, or at least supplement it, or pay off your debt, to where when you do try to go full time, you don't have this pressure to go out and create results in the market. I think that's one of the biggest challenges that people have, is that they put themselves in a position to where they've got to make money now. And so when you do that, you're already hurting yourself, because mentally you're not trading from a position of strength. You're approaching the markets from a place of weakness and need, and as opposed to a place of saying, I heard somebody on a podcast the other day say, I asked myself, does this position, does it deserve the right to earn my money? Almost to that point of saying that, I am in control. What are you showing me that compels me to believe that this is the best use of my funds on this particular position? And it sounds arrogant, and it may even sound corny, but I could relate to that. You have to really do that, and you can only do that when you're mentally strong, and when you're trying to pay your mortgage, you're trying to pay your light bill, and you're trying to go and create $1,000 that way. I don't know. You might as well just go to The Godfather, because you'll probably have a better chance of coming out alive. So anyway.
That's good advice. When you're trading, or I should say this, when you're trading and you need money badly, you're going to make emotional decisions, and that can create compounding problems. You can lose a lot of money.
Absolutely. Yeah. Absolutely. I always, that's why I don't even say I never ascribe to the fact of this gets philosophical, like chasing goals. I say I attract goals. Because when I think about children, I think the nature of things like dogs and babies, when you chase them, they run away from you. So coincidentally, when you walk away from them, they chase you, and so it's almost like a reverse psychology of, the need and the desire is almost like an energy, like it knows that you're like you want it, and so it doesn't date you because it knows you want it. So like if you paid it no attention, it would completely be like maybe chasing you down. But I'm half joking with that, but yeah.
All right, let's get into the rapid fire round. This is the part of the episode where we get to find out who Kevin really is. If you can, try to answer each question in 15 seconds or less. You ready?
Okay, got it.
All right. What is your favorite podcast?
Favorite podcast as it stands right now is actually Carrie Lutz, the Financial Survivors Network.
Never heard of it.
I was a guest of his, and so I started listening, and he just has really different guests who come in and talk about different areas of finance, from land development to real estate to the markets, and it's I honestly didn't think I was going to like it or like him when I started listening to it, and I've become just super engaged into it. So that's my favorite. Carrie Lutz's Financial Survival Network.
Nice. All right. So what is a recent book you read and would recommend?
A recent book that I've read and recommend. That's excellent. I do read, and sometimes I do recommend. I would say, I'm gonna say pass.
Okay, that's fine.
I'll come back.
All right. Movie question. What is your favorite movie?
Okay. Favorite movie all time is Rocky IV. Sylvester Stallone and Apollo Creed and Drago. No greater combination.
That's the first time that one's been mentioned on this podcast. That's good.
My sister and I could probably quote every word to that. Like
living in America.
There you go. That's awesome. That's my favorite.
Right on. All right. What is the worst advice you ever received?
The worst advice I've ever received is that's a good question. Maybe stick with it. I'm sure, like as it related to a relationship or something, like stay with it, give it a shot, give it a try. And I so many things I've learned, and as it relates to cutting losses and things like that, I think that I would not do that anymore. That's a relational piece of advice I got.
Sure. Yeah, I'm a firm believer that sometimes, you do need to quit. If it's something that you're looking ahead, you see the forest through the trees, and it's like, it's not worth it.
Right.
I've quit things in my history and moved on to something else, not relationships so much, but other jobs and whatnot. Anyway.
I got you. No, hey, if it's important to you enough, you're considering staying in there, right? I mean, whatever it is, you want to hang in there because, that's how we're built.
Right. All right. What is the best advice you ever received?
The best advice I received, it may have probably been more encouragement. There's two. So this is actually funny. So actually, as I think about it, so it kind of connects to with the old one. My dad told me, he passed away, but Stallone passed away about 8 years ago. But I remember when I was first getting married, and this is going to sound so bad, but it's the truth. I remember we were in the back of the church, and he said, if you don't want to do this, and I didn't think I didn't want to do it. But he said, if you don't want to do this, if you truly are you want to walk away right now, you can do that. And I know everybody flew up here because it was up on the East Coast. And it's like, everybody flew up here for this event, but they will be okay. If you choose not to go through with it, it's okay. And so I think my dad was the first person that gave me permission to reevaluate my circumstances. And so that was probably the piece of, it wasn't advice, but it was kind of, it was kind of a word of encouragement. Right. And so, so I've taken that with me, because he's always, and he was not a quitter by any stretch of the imagination, but he always gave me permission to give myself grace. And I think that's the biggest thing that I've taken away from that conversation.
Yeah. Love it. All right. Last question here. If you could go back in time to give your younger self advice, what age would you visit and what would you say?
So I can go all the way back to where I think the birth of my childhood trauma was, or I could try to encourage myself later on down the road. So I probably would go back to college, and I would tell myself, go for it, like literally commit to your wildest dreams, everything else be damned. And don't worry about what what has been perceived to be the path. Don't worry about what you think you're supposed to be doing, or you're trying to combine, conventional norms. Go with your heart and go all out for what you want, and everything will work out. And I think that would have been, and I would have told myself, learn about credit, so I had really good credit, but I didn't know it. And so I didn't really use it. I didn't use it. I didn't destroy it, but I didn't leverage it probably as good as I could have, so I would say, learn about credit early.
Nice. All right, Kevin, where can the audience reach you?
Okay. So I can be reached online at fmtrades.com. That's FM, like the radio station, frequency, trades with an S.com, FM Trades. On LinkedIn, my name is Kevin L. Jefferson. And on YouTube, we are the Forex Family. And then on Instagram, it's at Helpmade Millionaire, HELPMADE Millionaire. You can find me those 3 places.
Awesome. All right, Kevin, thank you so much for your time. We'll see you.
Thank you, Sean. I appreciate it. I enjoyed it.